And okay, officially good afternoon. Happy Friday. Take a breath. We're gonna talk about this week. We're gonna talk about today. We're gonna show grace to ourselves. We're not gonna be hard on ourselves. We're not gonna be like, oh, I should have, I would have. We're gonna learn. That's what we're gonna do. So, Michael, good to see you. Welcome. Welcome, everyone, to the Market Watch Group Weekly Market Wrap. It's our Friday session. We close the week out. We process it. We try to process it now because there's a lot of times I'm still making decisions where I'm literally going to be like, hold on a second. If I need to make an adjustment on a trade on my other screen, I would imagine you're doing the same thing. If you're here, you tend to watch the last hour at the end of the week. There's always decisions like, do we hold? Do we buy something new? Do I add something? Do I tighten something? Do I what? Right? So I feel like an early preview on our market posture can help inform those decisions where we say, woof, all week long it was like, hey, it looks like we're going to come out of this. We had a strong pop on Wednesday, and then just overwhelmed again, it seems. Yeah? Okay. And now we adjust. My name is Scott. I will be your host. That was a long intro. Really too long. Disclaimers. We're not brokers. We're not advisors. We don't give recommendation. We don't give advice. This is for education and illustrative purposes only. We're here together, man. We're in this together. Our sleeves are rolled up. We're fine getting dirty. Let's work. Today's agenda. All right, let's talk about today. What caused it? We said there's a good chance that the market reacts, especially if there's a miss. There was a miss. Two things actually happened. We missed on our non-farm payrolls number by a pretty good chunk. That's the first miss. I mean, it is weakness for sure. But it's not like, oh, it's catastrophic. It's like, okay, I'm convinced now. Prior to this first real and it wasn't negative. We didn't lose jobs. We added at 109 instead of 190. But 109 versus 150, that's not enough to sustain the labor market. The unemployment ticked to 4.3. That has triggered. We have triggered the SAHM, S-A-H-M, SAHM indicator. If you haven't heard me talk about it, that indicator is when the unemployment rate moves more than 50 basis points, 0.5%, above the 12-month low. Now, the 12-month low was around like 4.62 or 4.65, something like that. So we were flirting with it but remember that the 12-month low is the literal historic low. We've never had unemployment lower than that. We've had great economies where unemployment was 4.5%, 5%. We're at 3.6. Now we're at 4.2. No, 4.3. But it did trigger it, and I told you that there would be a response, and there seems to be that response. Okay. Market posture, we're going to look at the indicators and see what we think about it. We'll talk about trades. We'll look through what would you carry over. Any hedge that you still have, you're probably still going to carry. What to look for next week. So nothing is certain, but at this point we are shifting to expecting this to be more of a correction now. Imagine, right? We're in the war that is the market, and we saw some signs where we're like, ooh, our posture dropped. We said we're still willing to move forward, but willing to move forward with lower levels of risk, fewer trades, which means that we were somewhat digging in. It's a bit of a very small, light defensive position. So we would be, my analogy would be a pretty easy foxhole. Dig it out a little bit. I'm not expecting to be here long. I'm not going to put a lot of time into the defense. Well, that was the first thought, but all of a sudden we're like, oh goodness, we're getting some resistance here. We're going to be here a little while. What do? We dig in. That's what's happening right now. We're digging in. We're getting defensive. If you don't have these mechanisms in your trading plan, this is what it's about, is when the market does X, solve for X. Well, X could be a bullish breakout. What are you going to do? That's not what we have. What we have now is a consolidation that now seems to be shifting into a correction. Consolidation being more around the 5% mark, correction being more around the 10%. And that doesn't mean I'm like, oh, so you think it's going to drop to 10 and you're going to buy puts today? Nope, that's not at all what I think. I think that we now have to move into the last correction took 3 months. Down 4, up 2, down 5, up 2, down 5, and then a break, and then a recovery, and then we're back into the new trend. So it was 3 waves that ultimately netted down 10% over 3 months. So it's not like this crash. We don't crash typically into a correction. That wouldn't be what our expectations are. Expectations would be, okay, it's gonna have to work through this. So now what? Now the expectation, and we'll see it here in a minute, is that we have to move into more of a defensive posturing. We're digging in. That might mean you have hedges. That might mean you start taking a balance of bullish and bearish trades, some up, some down. If you're an options trader, you might put on more neutral trades like butterflies. Is a strategy right now with it's an inflated. So one of the things that we had done a number of were calendars, and we were doing very well with our calendars. We took profit on the last one. We made 30, 40%. We're like, bing, let's take it. Calendars are off the table, unequivocally. That is a Vega positive strategy. Vega positive strategies are initiated when volatility is low. VIX 13, 14. That's not where we are. We're VIX 21. Right? So we need to understand how market conditions are going to influence the way that we take, manage trades. What to look for next week. We're just on the lookout for any signs of stability because it's gotten a little bit nastier on us. We'll review our opportunity list. What do we expect to find? Not much. Right now, if someone's like, oh, I'm finding tons of things to trade, I'd be like, where? Right? I'm not seeing that necessarily. Okay. Ooh, let's go talk about it. I mean, we're off the lows. Let me show you what I've done. I've added a red line and a blue line to my chart. Why? Because we've broken the 50. I wasn't convinced here. But now that we've broken the 50, I've added the 100 and the 200. Why? Because those are the next likely levels. Last time, when we broke the 50, we bottomed at the 100. We never even flirted with the 200. Well, this right here looks fine. Well, guess what? We're actually still seeing the same thing. It's still on top of the 100. So let's talk about some levels. Shall we? We shall. We shall. Let me get a calculator. We'll do the market posture. Is everything working fine for technology? You guys are seeing it and hearing it. I just want to do a quick temperature check. Top of the market right now, 565.16. Let's just map out where the correction would be. 508.64. Which is right now the moving average is there. It's going to be a little higher than that. So I would say right around here, which is interesting because we're still above the moving average. So that moving average is going to still go higher, but slowly. So what's interesting is right now we're sitting right at the 100-day moving average. And if we break the 100-day moving average, Where would we expect the next, likely level to really hold up would be more at the 200, right? So I just want to have that level to understand what's in front of me here. Do we want to get in bearish trades? That's a tough thing to do because you've already missed this. Okay, so let's map this out for just a second. Okay. 565 16 times 0.95. 536.90. 536.90. Where did we get down to? 536.90. Literally the bottom of this candle is 537.45. So this is 5%. And then you can see we went 537 to 553. That's, about 2-3% back to the upside. And now what? So now if I'm going to drop 5 more percent, that's going to be from this high at we'll call it 555 times 0.95, 527. So if we're going to drop down to 527, here's the thing. We were at 528.60 today. 527, the next level is about right there, where we think now I go down about 5%. So maybe this thing stabilizes and it goes up a little bit. That's where, so we basically say that's move number 1. This would be number 2. And the problem is we can't expect it to behave at the rate we want. It could take a little while and sit here and then turn back up. But then what would we think? We would still have one more to come. And that would be number 3. And number 3 is maybe what gets us all the way down to the bottom. And that makes the full 10%. It doesn't just drop 10. That's what I'm trying to illustrate for you right now. We don't just expect 10 to just fall out. We expect it to move. So I'm going to go show you the last time, and you're going to see it looks very similar to what I'm seeing here. That's move number 3 right there. So that's where I would think, all right, I'm going to take some bearish trades. I think we've got one more 5% move that I could take advantage of, even if it's going to bottom at that point. Our posture would drop a little bit more, but I'm telling you, I'm reluctant. There's not a lot of meat on the bones left in move number 2 if it's going to drop 5 from its high. We're already down 4. There's just not enough left. You're behind. You can't be behind on bearish trades. There's an old saying in stocks. We say that they walk upstairs and fall out windows. So if you've noticed, I think it's falling out a window, it's not like you could be like, it's falling out a window, let's hurry and catch it. Nope, it already fell. By the time you notice it, if you weren't really anticipating it, you weren't ready. Does that make sense? So a lot of times, the reason I'm saying this is because in coaching, a lot of times people are looking at this as like, should I get bearish now? No, you're reacting. That's reactive. Don't react. Now look to see, how do I get in front of this market now? We were still in this situation. There was still bullish opportunity. What we're saying is now that we broke, now there's not. We don't have that now. Right? We're at lower lows. We're at lower lows with our last 2 days having given us negative volume. Let's talk about the posture. So let's pause. Is what I'm saying making sense? Does it feel relevant to what you're doing? Even though we're off the highs today, we have to recognize the sellers are here. Let's go back 1 year daily. Now, remember that pattern I just drew for you? I want you to recognize it looks like this. You had that first move was about 4, then it went up 2, then it went down 5, then it went up 2, then it went down 5. And that ultimately was a 10% drop. It didn't just drop 10%. It dropped over the course of 3 months. There was a lot of just uncertainty. Anyone who's like, I'm going to go get some. Now, do you think people got bullish in these areas? Yeah. Did we? to some extent, yes. There are opportunities there. We're going to take them, but what is our time frame going to be now? Remember what our time frame has been, 7 to 10 days. What does it become now? I'd say at best 3 to 5. Yeah? Maybe even 2 to 4 at this point. This is faster now. It's transitioning. You can't be thinking 7 days now. It's not that market now. It's a different market. Be water. Now you shift. But again, when you look at the last time, it move number 2 last time was smooth. It actually gave you an opportunity. This time, if this is move number 2, it might now just sort of meander for the next 5 to 7 days where it doesn't really drop much, but it does drop overall. And then yep, there's move number 2. It's not enough, and I'm not bearish enough that I'm thinking, let's go speculate to the downside. Hedge, yes. Balance, yes. Speculate. What's the difference? Hedging, you're too late. Balance would be if I have a couple of bullish trades, I'm going to balance it with a couple of bearish trades. Speculation would be I'm more bearish than bullish now. Now I'm looking to have 4, 5, 6 bearish trades and no bulls. Okay, well, let's stop and ask ourselves, is that what we want to do based on our market posture? So let's go reevaluate that real quick. Okay, that's a trade log. Let me get the market posture. Here you go. Okay. Long-term trend. Ooh, the long-term trend is at risk. It hasn't been for a while. Okay, let's go take a look. No, it's not enough for me yet. I mean, you can see that it's slightly closing underneath it. I'm going to actually say no, because I could just slightly redraw my lines. That's not convincing enough. I'm still going to leave mine alone. Eventually, I might decide that this is the new, like if that's where we bounce, that is not as steep as these black lines here. That would, when I'm convinced of that, actually, when I see that, maybe I would actually move it down 1/4 of a point. Because right now we're at a 1.75, but if I saw that pink trend, that looks more like a 1.5. That looks just a little less strong. So, nope. I keep doing that. Trade log. We're at a 1.5. No, I think that is a 1.5. I don't think I would lower that to 1.25. No, I think that's still good. Short term got beat up by 0.5 point. That's one of the places you can see where have we seen the most weakness on our market posture over the last 2 weeks. It dropped 0.75 on short term, 0.75 on volatility, 0.75 on volume. Those are exactly where I would expect to see. That's 2.25 off the highs. One thing got a little better. Everything else has gotten worse. So is it going to continue on this trend? Are we going to have to drop it again? Let's go make that determination. Yes. Why? Because we last time we marked a break and a lower low, and you'll notice that now that means that we're shifting. Right now, some people would say, Scott, I think you should draw a line here and here, and then draw a line here. And if you do that, your trend is now, I'd say that's a minus 1.5. That is not the intention with my market posture. That is a whipsaw move. When I break trend, which is convincingly what happened here, and made a lower low, which is what happened here, at this point, I would say we made a lower high and we're already making a lower low. So I am going to drop it again by another 0.5 point. It loses minus 0.25 for this and minus 0.25 for this, but it's still going to be positive. And that's the point, is I don't want to have like this. I went from positive to negative and positive to negative. And it's like, I did have it that way at one point, and now I don't. What does that tell us? If I used to dig a hole with spoons, and now I dig a hole with a shovel, What does it tell us about the way I used to dig holes? I don't do it that way anymore because the new way is better. Okay. What else? Yeah, that's gonna drop it, I think, down to a 0.5. Still positive, but it's not looking good. Similar thing happened back here. It was still positive. In fact, all the way back here, even during the corrective time, our short-term score never got below 0. It got to 0. It did. It got to minus. I lied. It got to minus 0.75. That's the worst it got. But that's not terrible. It took a while to get there, right? We were corrective by the time that happened. That's on purpose. I want my posture to be more stable. So, yeah, okay. Definitely going to lose a half a point there, though, I would say. Volume. Any thoughts? Anyone who's here? I know a lot of you guys are newer, which is great. So this is a good time for you to ask questions about any of these processes. I don't know where all our other guys are today. The volume is not looking great. These 2 days are a wash. We had a negative followed by a positive. And then I have these 3 days here, these 2 days here, and then I got 1 day here followed by 2 days here. So that's a wash. I'm just not going to count that. Let's just go with these. I have one buying day. 1, 2, 3, 4, 5, 6, 7. 1 to 7. God, that's nasty. That's nasty. And even here, you'll notice the most recent volume, 1, 2, 3 is 1 to 4. 1 to 4. So I'm at least gonna stay at a minus 0.75. I don't know if that's enough for me to drop it to a -1. I think that's about the same as it was last week. So I'm probably going to leave it as is. But that's a pretty nasty score, minus 0.75, right? Actually, it's over here. Minus 0.75 is right there. Okay, major market. That's definitely going to drop. I don't think we even need to go through it, but small caps are getting smashed back down. Dow's going to have a little bit. That's going to drop probably. That's probably going to drop at least a quarter, maybe a half. So we're already down into the twos, right? We're already at a 3 or even a 2.75. Sector rotation, there's a good chance that drops as well. Yeah, it's going to be a nasty reaction. We're going to probably go, I think maybe a 2 or a 1 and 1.75. Now let's keep talking about it. Please update market posture in downloads. It should be close enough that this is you should have, as long as it's not more than like a month behind, then you should be able to copy and paste it and then just work this in here. I'll go in and do it. I usually only update that about once a month. It's just because you've got all the way back to June in here. So if you're like a couple weeks behind, you can just come in and just pop those in. It just gives you good practice. Oh my gosh, no, you're good, PJ. Throw it out there. There are definitely times where I'll fall behind, and it's just like, hey, you're like a month behind, so no big deal. Call it out for sure. But yeah, we'll have to update the watch list soon, because what's going to happen now is this gets into more corrective times. Now we go into watch list shuffle. The core things will stay, but some of the stuff that's been added, we're just going to start bouncing it. Get rid of it. And then as the market starts to recover, we'll be running searches more frequently to say, okay, now who's leading the risk? This recovery is different than last recovery. We don't want to watch last recovery strong stocks or last surge, whatever we want to call that window. We want to watch this surge. How do we come up with these scores? There's absolutely training in the content library. So if you go into there is a video for each component. Each component has a video, so you can just sort of listen to it. And then same thing with every part of the market of the trading plan. You guys will be so damn sick of listening to me talk. You won't even know what to do about it. Be like, oh God, here's another video of Scott yapping and flapping. There is a lot of hours of content in the YouTube of us just, talking about it, talking about what we need to look at, what we need to do. So yeah, hopefully it's helpful. I do need to get in there and try to organize that a little better. But it's on the to-do list, you guys. It's on the to-do list. Major market is going to drop. I think it's going to drop for sure. The VIX even. Going to Disneyland today? Nice. I had, as my kids were like wrapping it up, both my kids are in college now, but like as they were getting to the last few years, we were traveling for soccer down to, San Diego a lot. And then my daughter was flying out to Florida and they'd go to Orlando to play. And so obviously we would just like stay and then go to, Universal and stuff. Man, it's expensive. We did it like 3 years in a row. And I'm like, oh, no more. No more. If you live there, it's not as bad. Okay. The VIX. The VIX already has been dropped down to a 0.5. That's where the most amount of weakness has really shown up. I'll tell you one thing this is telling me. Be very careful with anything you are holding. Woo! Look at that. Man, that vol just came flooding in today. We're way off the highs. I want you to now notice what we've been talking about with hedging and how escalation works. This looked almost like there's no way that's going to happen because look where we are. And I want you to just notice how volatility comes. It floods. The smart institutions are down here, and that's who, when we say we're looking at turning the Titanic, there's a fleet of Titanics, really. Institutions aren't represented by one Titanic. There's a bunch of them. But the first one is who we're watching. We're like, whoa, look at that one turn. The rest of them are going to start. Let's go jump it. That's why we look for that pattern. We will look for that over and over and over. 3, 4, 8 months from now, we're going to be through this market, but we're going to be talking about it historically like we did this one, like we did the last one. These patterns come over and over again. That's why the VIX is such an invaluable insight. This is definitely the institutions showing some panic here. However, opportunity is born from this. You know what, David? No, you didn't miss it. I don't tend to go through the granular level of sector rotation or major market. We just sort of guess at that one because it takes a little too much time to pull those charts up. No, great. You call again. Thank you for calling it out so that I can, continue. I'm going to get complacent sometimes with like what do people know or not know? Don't let me call me out and say, not everyone knows what you're talking about, Scott. So give us some context. Great. I will. Never hesitate or feel bad for calling me out on something. I prefer it because I will forget. I'm very scatterbrained, especially Fridays. My ADD is really going strong. And my kids are like, it's ADHD. Nope. Not when you got diagnosed with it in the 80s. It's ADD. Okay. Yeah, this is now, is this like the sky is falling? No, the sky is not falling still. And in fact, you'll notice we're already way off these highs. So if we see something like this and then this, we will be first to be like, that's a go. We will trade that bullishly. These signals coming out of volatility. So we don't know. Is it going to come down like this? Is it going to come down like this? All I know is when we get that signal, I promise you, you're going to think, Scott, that signal is magic. Okay? There it is. Right out of that transition. It doesn't matter if it comes further down. When it comes, we're ready for it, right? Like that's That's the signal that tells us we've shaken off the remnants of institutional fear. Right now, what should you be doing? You should be in your shell. You should be much more protective from a risk standpoint, less willing to put trades on. Trades should be smaller. Anything you do should last less time. This is a great time. People were asking about going down to 1 day or 1 hour and 2 hour charts. This is a great time to go down to 1 hour and 2 hour charts, right? To say, now I'm looking to just capitalize on this. That's a day. Or I might capitalize on something like this. That's 3 days. Something like this. That's right. Our time frames are different. So can this help us? Yes. That's fine. Now we're not looking for as much. We're not looking for a nice bullish trade window in the context of an uptrend. Now we see ourselves in a different market context. So we adapt. That's all you can do. Questions. So what does that mean for the last 10 minutes? Well, if you have trades that you're thinking, should I pare this down? You might pare it down. Should I take losses? Should I? Now, if you've already sat through a good amount, you might not take the loss. If you don't take the loss, you need a line in the sand. If you're in a trade that's at a loss and you're going to carry it into next week, you have to put a line in the sand somewhere and understand how much you're going to lose when you get there. It's a funny situation. I was teaching someone how to use the Analyze tab one time. And I said, okay, where are you wrong? And he told me the number and we went to the Analyze. And I said, great. So you're willing to lose 800 on this trade? Yeah, that's what I heard. Absolute silence. Right? I said, you're willing to lose 800? Crickets are chirping. And then he's like, no, I don't want to lose 800. And I'm like, okay, well, that's what's going to happen if you get there. And if you let it get there, now you're losing 800 and you didn't realize you were going to lose 800. What's going to happen? You're going to panic. You're going to be like, oh, what do I do? Now the chimp is just raging around in the room. The chimp is out of the cage. He's trying to get to the keyboard. And if he does, he's going to start smashing it. That's what we're trying to prevent right now. Every trade you're in must have some level of a proactive stance that says, if I'm wrong, it's here. Here's how much I'm going to lose. If you have to start, right? If a trade got away from you this time, okay, learn from it. That happens. We can't be like, what am I? Learn from it. Start from now and be like, okay, let's give this next week. If I put a stop here and it happens to recover, maybe I can get. I don't care what it is. You have to have some level of reward and risk with the where am I right, where am I wrong. And that has to be what you go forward with to next week. If you don't have that, you should shut the trade down. That's what we need for our trades. We need to have something. We need a plan. That we can adapt the plan, but we got to have a plan. That's what we do Fridays. It's the best time. You got to carry through the weekend. It's always just a little bit more like, ooh, what's going to happen? And then it just has us ready to then move to the week, to reposture, and then start fresh next week. Continuity as we move through. Questions, comments, or concerns? Let's go through the watch list just to kind of see, what the carnage looks like. And here's the funny thing. Apple looks okay. Let me get back to the right chart. Doesn't look fantastic, but Apple's holding up, still above the 50. That's nice. It's nice to know that one of the big stalwart tech companies that is such a market leader is holding up. Am I going to be like, hey, it's maybe going to bounce? No, I'm really not interested in trading that. I'm still watching. That's a tough one to want to trade still, right? We know that the neighborhood is still somewhat on fire. Amazon got demolished on its earnings. Great. Broke the 50. Okay. What am I going to do? I'm always going to watch Amazon, right? That's one that I am always going to watch. AXP. Woo. So financials just in 2 days. Look how much some of these had such great trends. Now it's at the 50. Or excuse me, it's at the 100. That's why I put this on here, is to kind of watch and see like, okay, but I'll tell you what, these 2 days have been abrupt. Bank of America, I shut it down quickly. Here's the deal. I want you to notice something. I'm gonna own this. I let myself. I had a plan that said I'm gonna get in this trade if it breaks this high here, right? And then the news came out, and I said, "Hey, I like the news. I like the sector. And I, even though I had said I'm not going to do anticipatory trades where I didn't wait for confirmation. That's what an anticipatory trade is. When will I do anticipatory trades? When my market posture is a 5 or a 6, when you're like, hey, this market's bullish, let's go. But we had decided not. I had decided not. And then I just sort of let myself get caught up, and I'm like, all right, I'm going to put the trade on. Now, had I just stuck to the original plan, the trade would not have filled. It never crossed. I'm going to live with that. I don't see it as a mistake. I'm just saying in the overarching perspective, I had said I'm not going to take an anticipatory. But I also said if there's going to be a bullish bounce, it's going to be here or not at all. Okay. Talk about it. Process it. Give yourself some patience and some grace to learn and not just be like, oh, why'd I do that? I should have done this instead. We don't learn from that. That is unhelpful experience. We need helpful experience, right? With the definition of experience being what you get when you didn't get what you wanted. 1 of 10. Bob says it's 1 of 10 on the heat map. Yeah, right? So we broke down. We're now look, what's next? At best, we're looking at this thing dropping down into the 200. Financials now have work to do. Although, here's what I'll tell you. This actually accelerates its ability to recover. If I see something like that, game on. These don't have to be enormous. That's just still within corrective territory. Okay, I got to fly to get through this and not take too much time here. Everything's down, obviously, right? We saw breakouts in industrials, and now they're looking questionable. All the signs were there. It's not like we made a mistake. We followed the rules. So if I did something like, let's say, Fastenal, and I didn't get my stop out in time, I might have given back everything and even taken a little bit of a loss. Did I make a mistake? No. Did I maybe learn that I want to get my stops tighter sooner intraday? And I'm just speaking, like in the philosophical we, you, I. Do I want to, whatever happened, I want to learn from it. So there wasn't a mistake made. Well, maybe there was, and I'll let you evaluate that. But I don't want you to think I lost money and so I made a mistake. No. Look at your rules. Did you follow your rules? Then you did what you're supposed to. Now, if your rules need to be adjusted, that's different, right? That's a different equation to solve. CMG. I'm going to trade this if it gives me the reversal. Game on. If I get it, I take it. So I'll still trade. Costco. No. Still in consolidation. Looks close. Whoops, that's not what I wanted. Got out, right, Clint? You got out. Yes, me too. I'm out. Okay. Was it a mistake? Was there any mistake in that trade? Absolutely not. Costco breaks up, pulls back. We're ready to go again. It might not be for a while. It might look like this and then a little sideways. But as long as we're catching it in these areas before the next big move, that's what we're looking for. We can't be like, oh, the market's now bad. No, that's not what we think. CSX looks fine, but earnings are coming out. We'll see how they come. Carvana still looks fine. There's a few things that look okay on this pullback. Here's Fastenal. How are you feeling, everybody? How are you feeling? Second question, is that how you wanted to feel? And if not, Your challenge this weekend is to diagnose what happened. What led you there? We want control to be our number one objective. Control. Now, how am I feeling? Mildly frustrated. Why? Well, because the market turned. No one likes that. It's not like I'm like, you should be happy. And no, that's not what I'm saying. How do I feel? I feel like I'm in control. Am I like, hey, this market's beautiful, let's convince ourselves? No, I'm saying I'm in control based on these conditions. That's what the answer should be. I'm in control. My risk is under control. I can go to sleep tonight. I can go through this weekend knowing that when I come on Monday, I'm ready and nothing is untenable, right? Bitcoin not looking great. Gold still looks like it's hitting resistance. So that's one where it's like, hey, if you caught some of this gold trade, should you pare down a little bit and take some profit and make sure that if it gaps back, you didn't give it all back? Yes, that's the kind of thinking we should have right now in this market. GM, woo, getting nasty like Ford. Does Google look nasty? No. Does it look consolidative? Yes. It must complete its penance before it regains a seat at the table. Otherwise, it's what we call persona non grata. I'm happy I'm not in many trades, have reviewing to do and adjust my plan. I mean, my goodness, you couldn't have said it better in 2 sentences. That's exactly what you said, what I'm thinking. I have some reviewing to do and adjust my plan, because that's what we do. We review and adjust, and then we review and we adjust some more. And then what do we do? Then we review and adjust. Love it. Thank you, Bob. Appreciate it. Love it. IWM. Yeah, we gave back a lot of what scored our market posture score higher. As far as this goes, we just lost it on today. We were holding all the way until today, and then it's like, oh, okay, yeah, that should have an impact. JP Morgan, it's holding the 50. KBH looks fine. Coca-Cola, oh man, like earnings and whatever else. We found this. We got one trade, and then I'm definitely looking to trade Coke again, but there's nothing to do but wait for it now. Meta, I like Meta. Meta and Apple, right? Sorry, Meta and Apple. So we've got a window here. I think Meta and Apple can help lead the way. Take us to the promised land. 3M still looks bullish, but we're waiting for a pullback. Morgan Stanley, nope. All these things, nope. Look at that, testing the 200 now. I hope you find these consolidation lines it's almost like I can't see it without these lines now. They just show up in my mind, and I think, okay, that's what I'm waiting for. Easy enough. Micron. Do you see it? Whoop. You know you're not trading in the consolidation. You're waiting for it to convince you. Netflix. Easy enough. Less of a consolidation. NVIDIA. Yeah. Someone brought us this. Ooh, it had a nasty pullback, but it's still holding up. That might be something. Palantir, we said we're careful about the neighborhood burning, and you can see why. QQQ, breaking the 100, right? Now we're worried about the 200 next. S&P, testing the 50 and holding for now. TJX, consumer, still looks okay. TSM, like NVIDIA, but pulling back. Here's some good news. The dollar's staying down. We would love the dollar to continue retracting. Yeah. The VIX. God, it was a very interesting day on the VIX. Walmart. Oh, Walmart. Earlier today, I'm like, Walmart looks like it's trying to hold up. Still fine. Walmart looks like it reset one channel down. Okay, let's see what happens. Here's a question. Have you started to alter how you see the market already, even if you're new? Maybe even just with the VIX, just the importance of that institutional sentiment indicator that you're hopefully realizing is just so insightful to us. Just gives us so much like, oh, there's tremors. We don't have earthquakes without tremors. We just need the right equipment to make sure that we're seeing it, right? Let's rattle through the sectors real quickly, and then I'll let us go. Materials, there's still strength there. Where are we willing to trade if we're going to put something on? Defensively, right? I got to tell you, look at this. This is interesting that communication services still looks like it's holding up. We made a stab at energy. Energy gave it back. There's nothing there for us now. Same thing. You should have got out early yesterday. Already knew about the VIX, but getting the charting better. Love it. And if you're sitting here thinking, man, but it sure would be great if, that's what I'm looking for. That's what I want. Tell me what that is. Financials, they're concerning. That looks like a little more than a hiccup. So we'll see what transpires. That looks like here's a quick gold star bonus to anyone who can tell me the pattern that just confirmed today. Ooh, this is a chart quiz. Pop quiz. Genius? No, what's that show? Pop quiz. Anyone want to take a stab at it? Looking for a pattern? We talked about patterns not being patterns until they're complete. I have a top here. And then I have another top here. Now, I don't know it's two tops until it cracks the middle. And that certainly happened with volume. Double top Bob. Bob gets the double gold star to Bob Rowland. I wonder if someone ever worked with that guy and planted the seed of price patterns. I don't know. I'm just kidding. Yeah, that's not that. These are concerning things when we see stuff like that. Anyways, let's talk about industrials. Iffy technology, more than iffy. It is absolutely corrective. Staples are showing some defensiveness. Utilities are showing some defensiveness. You guys, I'm gonna actually throw a flag on myself, a football penalty flag. Flag on Scott for not making a bigger deal of this. That's on me. It showed us. It showed us. When the market shows you something, believe it. Yeah? That's a good rule. So I'm going to flag myself. I should have seen a little more defensiveness than there. It wouldn't have adjusted anything other than maybe actually pulling the trigger on an XLU trade as additional balance. I'm not like, oh, what have we done? But look, always learning, right? Always learning. Okay. How are we feeling now? Ready for the weekend? Let's go relax. It is what it is. The market's closed. There's nothing you can do about it. Let's just dust ourselves off, prepare for next week. What are we going to do differently? What have we learned? What are we going to do better? And go from there. The Only Options Trading Book You'll Ever Need by Russell Stoltz. I'm going to take a look at that, Michael. Thank you for the recommendation. It's a funny thing because I used to keep such a well-cultivated list of books. And now I'm like, I really haven't done a lot of maintenance on that list in 15 years. So, God, it makes me feel old, though. So, that's not great. Hey, you're here. That's worth something. You're here when it's hard and you're still getting through it. Yeah, like I said, give yourself some grace. I hope, if nothing else, if you're just paper trading, this is nothing. You'll learn to just sort of shrug this off as part of doing business and continue to expand from this. The problem most people have is they get here and they're just frustrated and they don't do anything about it and they don't learn from it and they don't look at the patterns and then it's the same thing, like a broken record, like Groundhog Day over and over. And maybe they get with a coach and we break them out of it, and maybe not, and maybe they eventually quit. You're here. That's step number one, right? Thanks, everybody. It's good to see you guys. I'll be here Sunday at 11 a.m. Eastern time with a full cup of coffee, ready to talk through this thing. The chimp will be in the cage asleep. The professor's at the computer. We're going to do some good work. I hope you can join me for that. Thanks, everyone. Have a great rest of your weekend and day. As always, happy trading.